And let's look at, first of all, Ethereum. That was the top of the list. So basically what we got here is, you guys may recall, actually this is a repeat. We've got the wedge formation. So this is one of the patterns we have that is very common. And what you can often see is you'll have the price move up, stay within a wedge, shrink its range, and then when it explodes out of the range, it has a big move up or a big move down. It's anyone's guess as to which direction. Sometimes you can look at volume to determine if it's a red volume or a green volume to see, which direction it'll go. But the important thing is you're looking at the height of the beginning of the wedge. That's usually the target size here or here. So if you look on here, we have a purple wedge, all right, that I identified just at the beginning of March. Okay, so what we've had is, I identified this here at this particular point is where I decided to place two trades, basically either buying here to go, actually maybe zoom out really quickly here. So these were the targets for an upward move. We were looking at going up to here or down to here. And the reason that's the stop loss is because that is below this wedge. Okay, so if it fell back inside of the wedge, that would act as a second support. If this failed to go up, maybe it'll bounce back within the wedge and still go up again. So you put the stop loss below the wedge. Okay, now that was the upside. The downside trade was sell from here and profit if it goes lower, or lose money if it goes, guess where? Stop loss right above the wedge. Okay, so the wedge can act as a obstacle for the loss. And so actually what you can see here is just 4 hours ago I hit my target. Okay, this was a trade placed 3 days ago. And very simple shape, wedge formation. And the reason I caught that, believe it or not, is because I actually found this first. So this trade is now completed. And it looks like now it's not as good timing to do either direction, because we can see this may go up, but at the same time, this is kind of neutral territory for any of these next targets that are upside and downside resistance. If I'm looking at a divergence, it's pretty close to where it needs to be. In fact, let me draw it more accurately so I can see, because I can't even tell with my naked eye. I want to draw two divergence lines exactly the same angle, and let's pull one of them up here and see it's exactly where it's supposed to be. So at this point, there's no opportunity for finding something that's priced off of what it should be. However, let's go to quickly now BTC USD. And for Bitcoin, you can actually see that there was this same lesson I was giving on a class earlier about wedges, how it goes up as much as it goes down. I had drawn this in here because that was empty space on my screen. We were still at this point in time, right? So again, you can see the same. I have my downside trade and my upside trade scenario, same exact situation. The wedge, oh, I've removed it already. No, it's there. So you can see the red and the green. Okay, so these blue lines here. Yeah, so those ones, I used to have blue lines there, but basically there is a wedge here, and it basically left that wedge now. We thought it would be closer to the upside. At that point, I bought, and we did hit the TP, the take profit. However, it took a little bit longer, but it did nonetheless hit that level. And guess what? It actually reversed from there. But at that point, it was 50-50 what it would do. But I did draw this blue head and shoulders and target to the downside. So that's actually pretty neat that we actually saw that before March. So here you can see March began when we created the future wedge in Ethereum, and in Bitcoin, it was actually finished by February 19th. So you see one pattern can copy another crypto. So what do we see now? That's the most important going forward. A whole bunch of head and shoulders. We had mentioned that very often in crypto since 2016, I noticed this. Before there was even Bitcoin futures, I saw a typical head and shoulders. When it was completed, it went straight into an upside down head and shoulders. When that was completed, it went straight into another head and shoulders. So we actually have that scenario happening here, where we can see an upside down one. It finally completed, and I said this could possibly be the beginnings of another head and shoulder. And look what happened. So fast forward till now, and that's why I had my target up here. We actually did get these levels exactly just shy of 62,000 actually on my third target. But now what do we have? Do we have a potential head and shoulders? Okay, so it actually is looking like for this entire last couple of weeks, I've been cautious on that front. And we are now, again, the last 3 candles or 4 candles, these are 4-hour candles. So in just the last 16 hours, we've had this massive sell-off, because that could have been anticipated by drawing this head and shoulders, although we're just at the neckline. Okay, so those that trade with me often know that I like to try to identify where the right shoulder may be. I'm a little bit more aggressive than just selling when it breaks the neckline. If this does break the neckline, all right, I'm going to actually draw that line perfectly right now just to make sure, okay, where the neckline would be. We've got the shoulder, so let's use this one here. Yeah, it's exactly at the neckline right now. So if Bitcoin goes any lower, pretty much at all, okay, so we're looking at even just a couple $100 less. Obviously, $400 less would be a very confirmation that we broke this neckline. Then I will anticipate that we're going to drop a lot more. In fact, I've been saying since 62,000, I told Ed, say go down to even the 40s for the thousands. So here is the height of this head from the neckline. We're looking at about $7,000. Okay, so another $7,000 drop is possible from this point where it would break the neckline. Now, there's no guarantee it'll break the neckline here. It may bounce around and break it here. That would just mean it'll go even lower, slightly lower. So that would be our starting point to measure 7,000 from. What is that level? Let's have a look.
Another 7,000. Doesn't that take it down to like 45K? Where
I'm going to check what we're at here. So 52,000. So from 52,000 minus 7, you're at 45K exactly. And I said 45K is very good target. In fact, I will be surprised. Now, we do have a support line here. This red line means something. So 48,000 will be some kind of support. But, this is not looking good. I'm going to zoom out to the daily candles and erase some of these drawings and refresh this. Okay, so just to see, we could actually see, so what you have here is a head and shoulders in the MACD itself. Okay, you can see this peak is taller than this one and this one. So this should constitute a downward move. However, what did the price do? It did not drop. It actually went higher. So there you go. There's your divergence on the peak to the peak to the peak of the MACD. And if I actually start it from here, then we actually end up even lower. We end up at this level, again, 45,000. So the first target I have is, let me get the cursor to be exact. My first target would be around 48,500. 48,500. My second target would be down to here, 42,000. And then my third target could be 35,000. According to this divergence alone, which I've had quite a lot of success with this, about 80% accuracy just on divergences like this. So, this, now the good news for the bulls, So there is some hope. So this could go up here and create a prolonged momentum strength for the next month, okay, until mid. Well, so 3 weeks, okay. We could get strength, and even then, it could last more than 3 weeks if this can stay up here before it drops back down. Okay, so then we could get an entire month of strength. However, just like it can stay up here for a while, it can stay down here for a while, which is the current level where we're now in oversold territory, which is bullish for the stochastics. But this is the disclaimer. If this stays, and by the way, the disclaimer is this is not financial advice, it's strictly just education how to read the chart. So consult an advisor before making any decisions. Don't hold us liable. But if this stays down here, the longer it stays there, then that does allow the door open for declines to occur until this crosses back above this line and starts rising and then goes back up. But that's pretty much it for, I went more than 1 minute, so this does look a little bit overheated, Bitcoin. And, I think that people will be, depending on the taxes, this could fall into the equation. Did people sell crypto in December to lock in their gains? They probably shouldn't have done that. They probably should have waited till January to sell if they had a profitable year, which probably everyone did if they bought crypto at 5,000 and it went up to like 40, 50,000 by the end of the year. But nonetheless, unless there's any other coin,
now
you got the idea.
Yeah.
All cryptos seem to be overheated and the divergences are there and it's not finished yet. I do see I'm in the bear camp, favoring the bears at this time. We'll have an update next week. I think Ed will tell you at the end how you can participate in that.
Okay, well, thanks for quickly